Excel, you're going to kind of marry the two systems so that you can increase your profitability. One of the behaviors that Mike noticed in himself and other business owners as he was buying and selling these businesses was that with the technology we have now, everybody can log into your banking, online banking on your phone, and people were making business decisions based off of your bank balances. They weren't looking at profit and loss statements or balance sheets or cash flow statements. My guess is that you aren't either. I wasn't doing that before I implemented Profit First. Instead, I was doing exactly what he talked about, logging into my bank account and making decisions based off of that. As an accountant doing that, I knew it wasn't right because I know there are things that go on behind the scenes that affect your bank balance, but it wasn't easy for me to pull those statements. And that's what Mike realized. So he said, is there a way to leverage that human behavior so that we can make good business decisions based off of our bank balances? And this is what he came up with. He came up with Profit First. The basics of Profit First is that we are going to open 5 different bank accounts. That is just the basics. I didn't say this, but I think at this point we've worked with over 50 gyms in the last 4 years to implement Profit First. We specialize in the fitness industry. And so when we're talking with gyms, we will usually recommend anywhere from 7 to 10 bank accounts, depending on different taxes in your state or how you're doing payroll. Lots of different things go into the customization of your implementation. But we're going to go over the basic 5 today. So like I said before, you're probably operating out of one bank account, and all of your income comes into that bank account, and then all of your expenses go out of that same bank account. And what that means is we don't really know what we have in the bank account. We can't tell how much income we have in a month or how much expenses we have in a month without looking at an income statement. But if we open these 5 different bank accounts, you'll start to see and recognize some trends in your income and your expenses. So what are the 5 accounts? The first one is your income account. And that's where all your deposits are going to be collected throughout the month. And then on a regular basis, 2 to 3 times a month, you're going to allocate all of your income into these other 4 accounts. The other 4, the first one, hopefully it's not a surprise, it's profit. That comes first. So we're going to allocate a little bit of our income into this profit account. The second one is owner's compensation. You may or may not be paying yourself right now, but I would argue that you are the best employee you have, and so you need to be compensated for the work that you do in and on the business. So we set aside that money second after we set aside profit. The third one is tax. As an accountant, the last thing I want to help you do is increase your profitability and then not have money to pay taxes next April when you have a liability. So we're going to start saving that money right now so that you don't owe a lot of money that you don't have saved next time you owe taxes. And then the fourth account that you're going to allocate to on a regular basis is your operating expenses. And that's where you're going to pay all of your other bills from. So everything that's currently coming out of your one big bank account is going to come out of your operating expenses, your rent, your payroll, your dues and subscriptions, whatever it is. It's going to do 2 things. Like I said, it's going to help you see the trends of your business. So you're going to start to realize how much income you have and how much expenses you're spending. The other thing is it's going to force you to become creative. One of the laws of psychology that Mike really implemented when he created the Profit First system is called Parkinson's Law. And basically that says that our demand for a resource will increase to consume the entirety of that resource. So I'll give you 2 examples. Our 2 most valuable resources, time and money. If I give you, let's take it back to school days. If I give you a week to write a book report, you're going to take a week to write a book report, or 3 months to do a business plan. You're going to take 3 months. If we say, no, the book report's due tomorrow, we're going to get it done tomorrow because we can write that book report in a night. Same thing with a business plan. If you need to get it done in 3 weeks, you probably can get it done in 3 weeks. You're going to break it down into bite-sized chunks, and you're going to prioritize that to get it done. Same thing happens with our money. If you currently have $10,000 worth of income coming into your business on a monthly basis, you're probably spending $10,000 on your business. However, if we say 1% of that, so $100, we're going to put away as profit, I can almost guarantee you that you can find $100 not to spend on your business next month. Whether it's taking somebody out for meals and entertainment, buying coffee for yourself, some due and subscription that you're not really getting your value out of. There's lots of different things that we can look at. Office expenses that somebody else is spending for you and you're not giving them a budget. There's lots of different ways that we can find $100 to start putting into a profit account. And that's the epitome of the Parkinson's law, is that if we reduce the amount in that operating expense account, you'll learn to live off of it. So there's, like I said, there's a lot more that I could talk about, but that's kind of the nuts and bolts of the philosophy. There is in the book, which if you haven't read it, I highly recommend either Audible or Kindle version, either one, or print. There's what's called an instant assessment. And so that's looking at your last 12 months of business income and expenses and figuring out what your percentages are. That's where we want to start. So if you happen to have a 2% profit percentage right now, then we want to increase it to 3%. If it's at 0, then maybe we need to just start with 1%. So we need to figure out where you're at first, and the instant assessment will help you do that. We often refer to that as the ice bucket challenge. It's a lot like getting a bucket of ice dumped over your head. It can be very shocking to do that instant assessment, but it's one of those things where if you don't know where you are right now, there's no way to make it better. So figuring out where you're at and then making it better. Sorry, I feel like I'm dinging. Hopefully that's so like I said, that's, and we help people with that instant assessment and going deeper in the whole implementation process. But that's the quick 10-minute version of Profit First. Like I said, there's lots more. I definitely have some practical tips that I can give at the end if we get to that point and we haven't already talked about them. So I guess at this point, I'm open for questions.
You said with some gyms, you open 7 accounts. What are the additional ones?
Yep. One of the very first ones is an equipment account, because if you don't need anything brand new right now, I can guarantee you're going to need something new, in the next year. And again, it's just one of those things that it's easier to set aside $100, let's say, every time you're doing an allocation than it is to come up with $1,000 in a month. So it can work a couple different ways. If you know right now that, you need to replace a bike or something and it's $2,000 and you need to do it in 6 months. I didn't pick really good numbers. Let's do $2,400 in 6 months. It's $400 a month, $200 in allocation. If there's nothing specific that you need right now, then we can just set aside, like I said, $100, pick that dollar amount so that you're always saving something. So that's one of them. Another one is an annual expense account. So I don't know if any of you are CrossFit affiliates, but that $3,000 affiliate fee hits hard some months. Even if you're not, a lot of times there's an annual insurance payment. Even if it's travel and you know that you're going to go to a conference once a year and you're going to spend, again, let's just say $2,400 traveling, it's really easy to set aside $100 a month versus, $2,400 in 1 month. So those are the 2 main ones that are kind of discretionary. If you pay sales tax on everything that you collect, that's one that we set up right away. And payroll, again, it depends on your payroll provider. Some of them pull out all of your taxes all at the same time, so you don't have that worry about maybe spending the money before you remit it to the government. Other payroll providers leave that in your account, and we've seen too many times where people spend that money and then those taxes are due and they get behind on payroll taxes. So those are the 4 that we'll discuss in detail with people when we're implementing and customize for them. I saw a question come in the chat. Let me see. Is there a tax advantage to sending in quarterly tax payments or just keeping it in the tax hold account? That really comes down to a philosophy question, whether you like to loan the government money or whether you want to pay penalties at the end of the year. I say make your estimated tax payments. I don't want to see people paying penalties at the end of the year. I would also say, though, make sure you're revisiting your quarterly estimates with your tax preparer on a regular basis to make sure that you're not overpaying on those quarterly tax payments. Hope that answers that question. What else? What other questions?
How about, I don't want to hijack this so people can tell me to shut up. How about whenever we're setting up accounts, like we recently set up the initial 5 accounts. And I know in the book, it was like, oh, you'll be able to get these set up for free. And at least at the bank that we've been using for a long time, it was like, no, they won't be free. And here's why. To me, it sounds like it's more like the small town banks that will do the free, but then it's the inconvenience of switching everything over. Do you have any tips for bigger banks? And like, there has to be a way that they can do them free, or am I completely off base there?
Chris, I just opened up a bunch of accounts. I don't know if this will be helpful. And Shannon, I meant to email you this too. I don't know if you guys have a Citizens Bank there, but Citizens Bank, which is a pretty big national bank, and it's big, at least where we are regionally, has free small business checking account. There's no cost. There's no minimum or anything. I think the minimum is might be $25. There's no maximum amount of accounts that you can open. And once you've opened them, you can zero out the balance at no penalty or anything like that at all. When I went in there to open it up, I'm guessing that she had probably worked with somebody else who's using the Profit First membership, but there was no issue with that at all. And she was like, no, we have a lot of people who open up tons and tons of accounts. There's no maximum number for that at all or anything.
There was, we have 3 accounts with our bank, but it was the adding on additional accounts, and then there were minimums that kicked in on those additional accounts. So it's not that there's a charge to open them, but there's minimums that we have to have in the accounts, and some of those minimums I was like, we're not going to have that. So. Yeah,
for these ones, again, they're free checking with no minimum at all. So you could literally have like a zero balance carrying it. I think it's $25 to open it, but then like I said, you can zero that balance out. They just need something to open the account with. And the other thing that was pretty awesome with them was they had a very high cap on the transactions that you can make. With each account was like each account is given like 200 free transactions before there's any fee for that as well too. And there's no fee or transaction penalty for changing money from one account to the other. So as you're like transferring funds back and forth from like the revenue account to all the others, there's no issue with that at all. It's just literally like processing checks and credit cards.
Yeah, sorry to jump in, but with that minimum fee, with that minimum balance one, I have Chase, and they're like, as long as you keep like a $2,000 balance in each one of the accounts, it's free. So how do you do that when you empty out the account to pay off for, sales tax or corporate tax, things like that? So.
Yeah, so there's lots of different banks that all do it very differently. Rob's right. Citizens has been great. We have found really good luck with credit unions. So if there's a credit union in your area, I say that, but the credit union in my area is the worst one for it. So it really just depends on the bank. I think that Chase will give you 99 free accounts if you have $10,000 in there. So, it's a goal to work up to having that amount in, and that can be in all of your accounts altogether. So it really depends on the bank. And I will say too, I feel like it really depends on the relationship you have with the bank. So I have some customers that are at Wells Fargo, have multiple accounts with no problem. And I have other customers that are at Wells Fargo and pay a monthly fee on every single account. So somehow they have a relationship with Wells Fargo where they got those fees waived. A couple other things that you can think about. I have had good success with asking bankers to waive those fees, even just for the first 6 months while we try to build a balance. So that sometimes gives you a little bit of time. As far as having a $2,000 minimum balance, there are times where we just say, okay, that's going to be our zero, is $2,000. It's a lot of money to have in there, but at the same time, if we're working to increase a rainy day fund, we can have it just spread across all of our different accounts with a $2,000 minimum balance. So there's a couple different ways to work at that. Unfortunately, right now, Capital One used to be our go-to for banking. They have great online banking and had free accounts. They have recently frozen all of their new accounts, and so can't add accounts there. So we're all Profit First professionals kind of struggling to look for banks that will be friendly across the board. They're out there. You just really have to dig for them and look for them. And sometimes having to move all of your operating expenses from your current bank to a new bank isn't always a bad thing, especially if you're having problems cutting your expenses. If you no longer have money in there and your vendors have to call you and say, what account do you want me to pull this charge from? It forces you to think about, do I even want to pay this vendor? Obviously, some of them you have to, your rent, your MindBody, Zen Planner, whatever management software you're using, you have to pay those. But it forces you to think about some of the other dues and subscriptions that are just automatic on your account. Does that help?
Yeah. Yeah, thank you.
Awesome. Okay, good. What other questions do we have?
I have a question. When you said pay yourself, when do you think is the right time to get to that point where you say, okay, I've made enough to cover my expenses and I kind of deserve a paycheck now? When is that threshold?
Yesterday. You really should be doing it from the very beginning. I know it's hard, and I wasn't always doing it either. I was guilty for sure. But if you're working in the business, you should be paying yourself for the work you're doing in the business. It's really a matter of budgeting for the other expenses and making sure that you are using your time as efficiently as possible, and not hiring until you really have to. Who else? I heard somebody else come on.
I've got a question about the my internet is kind of weak, so just wave if you can't hear me.
Okay, you cut out there for a little bit, but I think you're good.
Okay. I started my instant assessment, and one thing I was confused by is the tax component. It's stated as what amount has the company paid of your taxes, not corporate taxes. Can you break that down for me a little bit more clearly?
Yes, absolutely. Great question. We get lots of questions on taxes. So I'm not sure how you're interpreting the corporate taxes, but it's all of the taxes that would be reported on like a 1040 or an 1120S, depending on your incorporation status. 1120Ss don't pay taxes. It all goes to your 1040. But it really is your income taxes that you personally are responsible for as the owner of the business. It would be corporation taxes if you're a C Corp. I haven't yet seen a gym that's a C Corp that needs to be a C Corp. So hopefully you're not, because there's not really tax advantages there. So it's your income taxes that you owe because you own the gym. That can be also included in your payroll taxes. So for instance, I see people a lot of times where they will increase their payroll and increase their withholding so that they don't have a tax liability at the end of the year. They're paying it throughout their withholding all year long. If that's the case, then that tax account would be meant to reimburse you for those taxes that are being withheld from your payroll account. Did that help clear it up? It's a very complicated and convoluted area for sure.
Thanks.
Anybody else have any questions? I would say, oh, go ahead.
Thank you. So if I do my initial assessment and found out that I've got a pretty wide gap between where I am and what some of the targets are, what are some of the strategies and ways to begin to think about how to close those gaps, besides what you already mentioned is like, what can you live without? But anything else you can offer to begin to think about how to close that gap?
Yep, absolutely. First of all, you're not alone. I've never had anybody come in without a huge gap, really, between reducing their operating expenses and then the target that they need to be at. Mike in the book talks about a really great strategy. Get out your last bank statement and highlight every single transaction that is an absolute must-have, and then ones that are giving you a return on your investment. So those two we need to have. The rest of them we can start to question. And question things like your CRM, your calendar scheduling tool. Not that those aren't absolute necessaries, but is there a better option out there is number one question to ask. And number two question, and maybe these are just, they go hand in hand, not that one should be asked first and then the other, but the second question to ask is, am I getting all the value that I possibly can from this CRM? Case in point, I just figured out today that I have two softwares that do the exact same thing. I'm using one software for one thing and another software for another thing, but really either one of them could do both. I just didn't know. So I can get rid of one of those. Is it going to take a little bit of time and effort on my part to move everything from one to the other? Yeah, but it's also going to cut $50 out of my operating expenses every month. $50 isn't a whole lot, but $600 on the year, that's a decent profit distribution that I can take or sock it into my rainy day fund. So those are the two big things to start looking at, expenses. Do I really need them? And am I getting every single value out of it that I can? Dues and subscriptions that's the biggest one that we see people not extracting every ounce of value that they can. You're paying for a membership and what's included with it. That might help you not necessarily cut other expenses, but can you increase revenue? That's another tactic that we go quick to, honestly, when we're working with fitness businesses, because when's the last time you did a price increase? And do you need to do a price increase? And how can you do that without taking on any more expenses? Most of the time, it's not that difficult to do without taking on added expenses. Does that help?
Very much. Thank you.
Okay. Awesome. Good. What other questions? Who here has, just show of hands, who has started to implement Profit First at any level? Okay. Awesome. Does anybody else know their numbers that you'd like to do an instant assessment? We could do one live just to see, can help you walk through all the process of that. Anybody brave enough? I'm just trying to think about some of the other, highlights then that we talk about. We've already talked about some of the additional accounts that we often recommend. That's definitely an area that, one of the mottos, I guess, sayings that we throw around to Profit First professionals is when in doubt, open an account. So, if you're thinking of an expense that you think you might want to open an account for, go ahead and do it. Holiday parties, or if there's a big, if you collect money and then send a bunch of your people to do a Spartan race or something like that, but you collect the registrations ahead of time, so it's money that people give you but it's never really yours. Open an account for that. Put all that money right in there, and that way when the registration time comes, you have it. Or when December comes, you have the money for your holiday party. Another one that we don't talk about too much, but if you do this, it's really important. If you have a lot of paid in fulls in your gym where people pay for 12 months of membership all up front, you really need to put that into a separate account. Call it a membership drip account, where every month then you take 1/12 of that out of your drip account and put it into your income account, and then disperse it across all the rest of your accounts. Because let's face it, in that 12th month, they're still getting service and you are still paying the payroll to service that person. So you need to have 1/12 of that set aside to pay payroll in the 12th month, rather than, this is so common that, I've done it too. I need revenue. Let's discount. Let's get a bunch of paid in fulls in here in November so that we can get through December and January. And then, next September comes and you don't have any of that cash and you're struggling to make payroll. So you do the same thing. And it's just this vicious cycle that you get yourselves in with doing discounts, which is a whole other topic that I don't believe in, and having to do paid in fulls and hoping that you get the same people to do paid in fulls year after year. So those are some other additional accounts that we discuss and sometimes recommend.
Could another account be like, if I let's say I want to hire somebody and I want to start kind of maybe putting money into that account so that I've got that money for them as they get ready to, or as we get ready to hire. And once it hits a certain number, like, okay, now I can hire that person.
Absolutely. It's one of the best accounts. We call them planning accounts, but yeah, planning for hiring a new employee, starting to set aside that money. I would love to see people have 3 months worth of salary for that person there before they hire, because let's face it, they're not going to be revenue generating people on their first day of work most of the time. So you need to have a little bit of a cushion there to get them up to speed where they are producing revenue for the business. And that's one side of it. The personal side of that is it's much easier to set aside money in a bank account and then decide that we can't afford this. And so we stop saving money and we go back to figure out how we need to do it than it is to fire somebody when you've already hired them. Now you have a name and a face with that money, and we're just all generous human beings, and we don't want to lay somebody off that we shouldn't have ever hired in the first place. But if it's just money, we can make that decision a lot easier. So that's a great account for sure.
Now, what's your thought process on hiring people that already have a clientele base that they're bringing over?
Yeah, I mean, I would still want that employee account set up so that you have a little bit of a cushion. But if you're bringing somebody on that already has a client base, you probably don't need to have 3 months worth of payroll set aside in that account. Kind of depends on how you're going to be paying them. You know, if it's going to be an hourly and they're not bringing enough people over to cover that, if it's straight commission, then you're fine to hire them with probably not much set aside already. And that's, you know, we didn't talk about much commission. In the book, Mike does go into great detail on, he calls it materials and subcontractors. If you're paying commission, you really are paying like a subcontractor. The difference with a fitness business, most of the time, what I've seen is you're not paying on a strict commission. You might have a base salary plus commission. And what happens is the commission really isn't enough that you need to account for that separately with profit first. Really, we say if it's not over 25% of your revenue, leave it as an operating expense. It forces you to think about your payroll expenses harder than if it's just put up as a subcontractor and you just take it right off the top. You don't necessarily analyze those expenses. So Stacy just asked, Peter, are you referring to individual taxes or corporate? And I wasn't sure either. Did I answer that question, or Stacy, do you have a follow-up question?
For the tax hold one, that would be like the corp. Actually, I don't know exactly because I'm a LLC, so It was kind of done as one. Yeah. So my taxes this year. So he just said, here, put this, just send these quarterly payments in. But my question was just like, if I just put that in the tax hold account instead, is that the same thing, or is there an advantage to sending those in?
Yeah, if you just put them in a tax hold account, you're going to be subject to underpayment penalties when you file your taxes. Gotcha. So I would definitely make your minimum payments.
Okay.
Unless something major changes in your business and you're not going to owe as much taxes. So that's why I say it's always a good conversation to have. I would say on a quarterly basis with your tax preparer, okay. Go back and make sure that those estimates are where they need to be.
Sounds good.
Yeah.
So for an LLC, having a multiple member LLC, so you set aside, let's say that you decide 15% is appropriate, like the book says, to put aside in that tax account. But then each individual, how do you go about distributing that? Is it based on percentage of ownership?
Yes.
Okay.
Yeah, and so when you have a multi-member ownership, LLC, S Corp, anything, we always base the tax percentage off of the highest tax percentage, the person that's paying the highest tax rate. So it's not going to necessarily be reflective of the business income because so much goes into that tax rate, what other things they have going on, whatever. But then yes, when you distribute, let's say you are not the majority shareholder needed the 15, but you really only need 10, you still get your share of the 15 that was set aside. Some of it's going to go to taxes for you, and some of it's just a profit distribution for you.
Yep. technically, I mean, isn't it all, when it comes to like cleaning out your taxes, it's all income, right? It's just like, here's income above and beyond what you needed, and it's allocated for taxes, kind of like your little mark next to it. Does that make sense?
Yeah, absolutely. It's all income. You're exactly right. When we're doing the bookkeeping, we do track it separately, and your owner's draw will show tax payments, profit distributions, and then just your draw, so that we see what you needed to live off of, what you took in profit distributions, and what you paid into the government. But yeah, as far as the government's concerned, it's all income.
Yeah. So when you're starting with someone new, especially like when it comes to LLCs and stuff, how much, so let's say that we're sitting down and we're going to get started together. What all do you look at? I mean, do you just say, let's talk about your business, let me look at that? Or do you actually start to get into, because there's that line of, for an LLC, it's their personal. Do you oversee that, all of that for most of the gym owners that you work with? Or are you just looking at their business?
We definitely start to talk about personal if they can't live off of what they are taking out of the business, or if they're it's so rare that we see gym owners taking more out of the business than they should, but it does happen, especially in other industries where you have a target of 50% owner's pay and somebody's taking 80% out because their overhead's so low, and then they're still struggling to live off of 80%. They're like, that's just not enough. And maybe it's not enough because the revenue isn't very high, but more than likely their personal expenses are way out of whack. And so, we'll absolutely start to say, okay, let's look at your personal budget. And then it becomes a whole nother, we try to get all the family members that are spending money in, and it becomes a whole nother can of worms, quite honestly, sometimes, because it's getting, two people at least usually on the same page. And the same is true with partnerships. We really want to have both partners involved in the conversation because most of the time there's different philosophies about spending money going on. And so we want everybody to be on the same page. But and we can absolutely talk about Profit First for personal as well if that's of interest, because we've helped people implement it in their personal life too.
I had one more question about the instant assessment.
Yep.
Does it matter, or does it make sense to use the last 12 calendar months, which you can do for most things except taxes? You have to use the last calendar year. Does that create any issues if you use the last calendar 12 months for your instant assessment and the last calendar year for taxes? Does that?
No, not usually. When we're doing an assessment, we will actually look at the last 2 full years and do that. Plus, like at this point, we're going to look at first quarter as well. And so the question about what do we look at? I mean, we definitely get access to QuickBooks if that's what you're using, or Xero. We usually want to see tax returns as well so that we can figure out what the tax percentage really is and what else is going on. But yeah, I mean, any 12-month period should capture everything that you have going on. I mean, your taxes aren't going to be exact when you do that, but you have your 12-month tax return that you can look at and use that number too. That makes sense. Yeah. Okay. Good.
Shannon, I have a question for you. I think I asked you this before, but I could use a refresher, and I'm sure everybody else will be helpful from this too. When working with somebody who's brand new, like starting their business, what percentages do you usually suggest that they allocate to each account? I know they're kind of set in the book as 50% to one, 15% to taxes, et cetera. But are those percentages usually realistic for somebody brand new, or is that something to work towards?
Yeah, they're usually not realistic for somebody brand new. I mean, let's face it, you have $0 revenue and you have rent that's due every month, so it's not realistic. So it's definitely something to work towards. What I would say, a couple different things. First of all, I want to use the analogy of an airplane. And the whole idea that, if you're given $50,000 to start your business, you take out a loan, that's what you've saved, whatever it is. Some of that needs to be runway money, kind of to get you started. Some of it needs to be airplane money to actually, have the facility open and running for the first couple of months. And some of it needs to be the parachute money, that safety net that you don't plan on spending. So think about that when you're really starting brand new. But the other thing that we do with brand new gyms is we don't wait until the end of a quarter to make quarterly adjustments. So in the book, he talks about doing quarterly profit distributions. And then at the same time you do those, do another analysis and figure out how much you're going to increase your profit, tax, and owner's compensation, and how much you're going to decrease your operating expenses. We don't want to do that with a brand new business. If we wait that long, your operating expense will start to creep higher than it needs to be because you have more revenue. So as soon as you're covering your operating expenses, we want to decrease that percentage so that you don't take on operating expenses that you shouldn't have until you're at those targets. So it's really just getting ahead of the game on that one. And the same is true if you do a price increase. We want to get ahead of that, and we want to know how much are we going to decrease your operating expense allocation by right away. Because the whole idea of doing a price increase is that we're increasing your profit. So we need to increase that profit, tax, and owner's compensation allocations as soon as we start to see that increased revenue come in. Did I answer that the same way, Rob, this time as last time?
Yeah, but a little more in depth, I think, even. I got a little bit more out of that one. That was great, Shannon. Thank you.
Yeah, absolutely. Any other questions about running Profit First in your business? We can definitely come back to that. I'm not going to say no questions about that anymore, but just to touch on the personal side a little bit more, we do, like I said, I've implemented it in my personal life, and we help people do that a lot. It's not so much on a percentage basis when you're talking about personal. I found it works easier to do it on a dollar basis. So let's just say you have $10,000 that you're bringing into your personal finances on a monthly basis between you and a spouse or you alone. It doesn't matter either way. I find it easiest to figure out what is your monthly fixed income or fixed expenses, sorry. So rent, mortgage payment, car payment, those things that you've taken on that you just have to pay. What is that dollar amount? We'll just say for ease, it's $5,000. So we're going to take 5,000 of that 10,000 right away, and we're going to put it into a spending account that is meant just for your bills. And then you really have to decide from there, what are your priorities? Is it vacation? Is it retirement savings? Is it saving for a new car because you don't have one right now or you want a new one? Do you have kids? And I have kids and they're on summer break right now, and that means I have to pay for summer camp and all these other things that aren't normal. Again, it's much easier if I'm saving for those all year long and trying to allocate that $10,000 the same way every month. So Christmas is another great example. If you know you want to have $2,500 to spend every Christmas, well, let's put $200 into a Christmas account every single month, starting in January. That way when November comes, you have it there and you can spend it. And you know, it's May, almost June, so you have 6 months to start saving for Christmas right now. That way you don't have to keep paying for it from January till March or whatever, whenever you finally pay off that credit card bill. So it really is figuring out what your priorities are and then figuring out, okay, we have this $5,000, how do we want to allocate it? Some of it's probably just going to be spending money. It depends on how you and other spending people in your family work. I've had some people who have opened up a separate checking account with a debit card for each person that spends money. And so they have their debit card, and when it's gone, it's gone. And they have to wait until they get paid again to get that replenished. And the same thing works for kids too. I'm a big proponent of teaching them about money as early as possible. So show them how to use it and give them some and then let them know, but when it's gone, it's gone. Same thing with debt. We didn't talk about debt in the business, but debt payments, regular ongoing debt payments come from your operating expense account. And then when you take a quarterly profit distribution at the end of every quarter, the majority of that distribution would go towards debt. And a small percentage of it still needs to go to you as the owner. So the same thing would be true in business and personal. You would wrap your minimum payments into your main fixed bill account. And then, you know, if you have a savings account, you start to put money in there and you can figure out how much of that then you want to make as an extra debt payment on a monthly or quarterly basis. So we didn't really talk about profit distributions at all. I can definitely talk about that too. The way the book is set up is like I said, Mike, with his hobby psychologist, he just figured out that we need to reward ourselves for being business owners on an ongoing basis. Every week or every 2 weeks doesn't really feel like a reward. That just feels like a paycheck. But waiting until the end of the year is too infrequent, and we forget about it, and we don't necessarily work towards it. So what he figured out is a quarterly profit distribution is the right amount of time, the right time interval to reward yourself. So at the end of every quarter, we take half of whatever is in that profit distribution and we pay it out as a bonus. So this is where we were talking about, it really just looks like income. You don't have to run it through payroll. If you're on payroll, you can just take it as a draw, but the government's still going to look at it as income. And that is your money to celebrate with. That is your money to go blow on whatever your thing is that you like to blow money on. It's not meant to pay those normal ongoing bills. That should be your salary. I started Profit First. We have to implement it in ours to be certified in our own business. Started on the first week of September. The end of September is the end of a quarter. So I had like $20 in there. But I took my kids for ice cream and we had a good time. And I was able to say, this is the bonus from my business that I've been running for 7 years without having a profit distribution. So, and then it just keeps growing from there. You leave the 50% in there so that you're guaranteed a profit distribution next time. And just with the power of compounding, that amount should always go up. If your profit distribution amount goes down, you need to check out what's going on in the business. There's something not growing in your business. And then, like I said, if you have debt, we would say 95% of the 50% and pay it towards debt. And then you would keep that 5%. And maybe it's just coffee. Maybe it's just a dinner. I don't know what you can do with 5% or 50%. It depends on what your percentages come out to. But do something for yourself to reward yourself for having a profitable business and paying off debt. That's a huge accomplishment when you can get it paid off too. Any other questions? Personal or?
One quick one.
Yeah.
What do you do? So I'm just working through percentages and stuff right now. And what do you do? Let's say you have a really good month and so you still have, allotted into your operating expenses. Normally it's going to take you $7,500, but then you have a good month and you have $8,200 in there based on, the increases and stuff. Would you then put that into the profit or what would you do with that?
I'd have a lot of questions. Why did you have a really good month and you don't plan to have that month next month? I mean, do you think that will be an ongoing thing or is it just a one-time?
No, I guess I'm just if I look at the last year, we've had a lot of growth so far this year. So but I don't want to totally be, oh, that's our new normal. I'm just getting through the part in the book where he talks about having your best month ever is your new normal and being wary of that a little bit. And so how do you kind of be conservative while at the same time trying to be accurate?
Yeah, I mean, you absolutely can take that extra $700 and put it in a profit account. I would actually say don't put it all in a profit account. You want to put some of it in a tax account and some of it in your owner's comp account as well. So disperse it based on your percentages amongst the three, and put some of it, towards equipment. But I really would be why, what are we doing to make sure that that does become not necessarily our new normal, but that it's not a fluke, and if it was a fluke, do we need to put it towards operating expenses or do we need to put it in a drip account? I mean, those kinds of questions.
Okay. Gotcha.
Good question though. Any other questions? I'm trying to think. I mean, those are the big, like I said, those 4 accounts. I will say when we work with people to implement Profit First, one of the things I offer is to talk to whoever's preparing your taxes, because sometimes they flip out when they all of a sudden see QuickBooks having 5 or 8 bank accounts. I just had a conversation with a tax preparer who was like, it's not a gym. So they were like, why is inventory a cash account? And once I explained it, they were all okay with it, but they just didn't understand. So Some accountants just don't get it, and some accountants aren't okay with it. They'll tell you that it won't work, but the psychology of it really does work. And one of the reasons I love working with fitness businesses is because the analogies that Mike uses in the book, you all get. You know, it's not a hard process. The system is really simple. That doesn't mean it's easy. I always say that's like, you know, doing a bicep curl. We can all do it. You know, we all have elbows. We can bend our elbows and lift a weight, but how much weight do you put in the end of it? That's what makes it hard. So where are your operating expenses already at? That's what's going to make it hard. That's what's going to make you think creatively and have to reduce your operating expenses. But it does work. And I can talk with accountants and explain to them what's going on. If the bookkeeping is done correctly behind the scenes, it doesn't matter how many bank accounts you have. Your income statement is still going to show the same expenses. It's just all coming out of a different bank account, which, like I said in the beginning, helps you to make business decisions based off of your bank account balances, which are accessible at the drop of a hat, rather than a P&L statement, which you have to hope somebody has done the bookkeeping on time like they were supposed to do in order for that to be accurate. And then you have to know how to read it. So, like I said, we have those conversations a lot, and I can do that too.
Could you actually talk through what that whole process looks like? So someone just starts working with you, maybe on like a micro level, like in the beginning, but then also what does across the course of a year, like how often do you meet with your clients, what that looks like?
Yeah, absolutely. So we usually say the first 3 months, we're going to be walking with you and having a conversation with you every other week. So we have a pretty intensive deep dive process that we walk through. See ya, Rob. Thanks for coming. That we get a lot of information. So we get information about sales tax and payroll and all those things that are going to help us customize the system for you. And then we get access to your QuickBooks file. I'm just assuming you're on QuickBooks. If you're on Xero, we can do it there too, whatever your accounting system is. And really start to dig into those expenses and figure out what are the percentages that we need to be using and where can we cut, or what can we start with first. So those are 2 meetings. The second meeting is really rolling out what we call an e-crop. So it's an evaluation, conversion, and rollout process. The evaluation is looking at your accounting system, converting into Profit First, and then we give you a plan that will show you over the next 6 quarters, usually, what percentages we would like to see you targeting each quarter. Instead of having this big lofty goal of 50% owner's pay or 40%, what does that look like 2 quarters from now, 6 months from now? Where can we get to from where we're starting? And some people will get to target in 6 months or 6 quarters. Other people, it's going to take maybe 3 or 4 years. Really just depends on how far off target you are when we start. I will say we have people that are working at targets, that are operating at target right now, so it is possible. I do have other people, however, who have said, you know what, I'm really happy with 35% owner's pay. I don't want to be working in the business any more than I am right now, so I would rather pay that extra 15% to somebody else to work in the business. That's me. I don't want to work any more than I am right now, so I'm willing to take a little bit less. So it's just, but it's making those decisions proactively rather than reactively. And we just help walk through that process with you. After we've done the rollout plan, then if you have your bank accounts open, we can start doing allocations together right away. Otherwise, we walk through the process with you of finding a bank that's going to work for you, and then finding the second bank that's going to work for you and work with the external transfers. And then we do allocations with people until they're ready to do that on their own. Sometimes we do one and they're ready to go. We create an allocation calculator, a spreadsheet that will help you figure out the transfer amounts, and we walk through that with you. Like I said, sometimes just once. I've done it up to 6 months with people until they were comfortable doing it all on their own. And so once we get through those first 3 months, and like I said, sometimes it's 2 months, sometimes it's 4, it just depends on the person, we switch to quarterly accountability calls. So it's a quarterly profit strategy session, kind of whatever you want to call it, but instead of, we can't meet with everybody in July, basically, but every 3 months we're going to meet with you and discuss what percentages you're using, how the last quarter went, and then what's coming up. What do you need to do differently in the next quarter to make your targets? I would say 95% of what we do is accountability. Same as what you guys do, right? It's checking in with people and saying, what did you spend your money on last month or last quarter? Where'd your profit distribution go? Did you take all your owner's pay? Those kinds of things. So that's pretty much the high level, how we work with people, and the micro, really. Like I said, I think I said at the beginning, we also do bookkeeping. At this point, that really is just the back end of Profit First. It allows us to be in your books on a monthly basis, so we can catch things that happen. So if I see that you didn't take a profit distribution in June and we're not scheduled to talk until August, I can get on that really quick and give you a call and say, hey, why didn't you take your profit distribution? That's not a really good example. Most of the time I see people drain their profit account in August when they shouldn't have. And then I can get on the call and say, hey, what's going on? What happened? And August was a bad month. Okay, how can we plan for that right now for next year? If that's a normal cycle for you. Or, I had a client who had a fire a couple months ago. So it was complete legit that he took out everything from his profit account. He had to keep afloat, but he was grateful that he had his profit account to fall back on. So it, like I said, that the bookkeeping really is an added level of accountability on top of the quarterly accountability calls that are really just developing the strategy for the next quarter. I know we're about out of time, so I did want to give one last tip, and then tell you guys how you can get a hold of us if you have questions afterwards, or you're interested in learning more about working with us or how to work with us. My one last tip is, the biggest way to succeed at implementing Profit First is to go open one more bank account right away and just start putting 1% of your profit into, or 1% of all your deposits into that account right away. Start somewhere, basically. And the faster you do that after this call, the more likely you are to succeed at doing it. I mean, you guys know this. It's basic psychology. Don't wait, because you won't do it. So get that account opened and then start putting in 1%. And so, maybe it is every day you go look and see how much deposit you had that day and you transfer. Maybe it's a weekly thing. However often it needs to be to make it easy for you. We really try to keep the system very simple and not complicate it. And sometimes that means doing it more rather than doing it less if you don't have that income account set up yet. So that would be my one thing. If you're going to do anything, go open that account and start putting 1% in it. We can always go up from there. And then I'm going to put a link in the chat room. It is to our form if you want to fill that out, if you are interested in having a call with us, getting personalized questions answered. We can walk through an assessment numbers, or if you're interested in getting us to look at the last 2 years and doing a deep dive assessment, we can absolutely do that too. So there's that link. Once you fill that out, we'll be in touch to schedule a time that we can just get together and, like I said, go deeper into your specific numbers from there. So I know we have a couple last minutes together if you have any other questions. Otherwise, it was great to be with you all today. I don't see any other questions. I thought Chris was going to be on here to.
That's me.
That's you. Okay. I wondered if maybe that was you, because it just shows up as strength action.
There's two things that happen that we love, which is awkward silences, and we let people write them out, because usually there's someone that wants to ask a question and they're like, I don't know if I should, and so we'll write out the awkward silence because they'll usually come early, and it's also just funny. But yeah, no, thank you so much for doing this. This has been awesome. I know, at least for me personally, I got a bunch of stuff answered, and we're working through the book, but I'm sure you've been talking to Todd. We'll be in touch, I'm sure. So
awesome.
I appreciate this a lot.
Well, I will hang out here for 2 more minutes in case anybody decides to be brave and ask their question.
This is the awkward silence.
It is. Okay. See you guys. Thanks, Patrick.
This is where you find out that some people just have their computer on, but they're not in front of it.
Right. Absolutely. We do these Zoom calls once a month with first professionals, so I understand how this works.
That's awesome.